Hi everyone, welcome aboard to our YouTube channel Fresher Platform Global, particularly BCom pursuing and pass outs. And this is a pre-session of journal entries and it is a very important session. In this session, you'll understand new or standard method which you have never come across to record the journal entries with respect to manual accounting and with respect to modern accounting. Okay, so let us start. This is actually the approach to journal entries. Okay, so reference to the transaction purchased goods of rupees 5,000 from XYZ and company. So this is a transaction, and the foremost thing or the first thing is identifying the type of transaction or the type of voucher or the type of journal is very important. Okay, before recording the journal entry, first we have to identify what is the type of transaction. The second thing is identifying the different accounts in the transaction. Okay, this is the second point. What are the different accounts which are present in this particular transaction? And the third point is which account to be debited and which account to be credited. These are the two things which are very important, because every transaction do have debit and credit accounts. Okay, one account will be debited and one account will be credited. And the last thing is in which financial statements these accounts can be found. Okay, so for example, like in this particular transaction there are two accounts, one is purchase account and one is XYZ and company. So let us understand in the next slide. The transaction is here. Mr. X introduced capital of rupees 5 lakhs in cash. Okay, this is the transaction. So what type of transaction is this for business? It is the first thing which we have to identify. It is a receipt transaction for the business. Okay, the first point. And the second point, what are the different accounts which are present in this particular transaction, or which are the accounts which are affected. Okay, one is capital account and the other one is cash account. These are the two accounts which are affected in this particular transaction. Okay, this is the second point. And the third point is which account to be debited and which account to be credited. Here the cash account is debited and the capital account is credited. The journal entry of this particular transaction is cash account debtor to capital account. Okay, so and the last and very important dimension or the point of the transaction is like where can we find the capital account in the financial statements. Okay, so capital account can be found in the balance sheet. I have written very clearly here. The capital account can be found in the balance sheet and it is a liability. Okay, it will be displayed on the liability side. Okay, so this is about the capital account. And the second one is cash account. Cash account can be found in the balance sheet. You can see here it can be found in the balance sheet and it will be shown on the asset side of the balance sheet. Okay, so these are the different dimensions which we can record along with the transaction. And another example, second transaction, purchase goods of rupees 5,000 from XYZ and company. So in this particular transaction it is a purchase transaction. Okay, the first point is identifying the type of transaction or voucher or the type of journal. Okay, this is a purchase journal. Okay, so the second thing is what are the different accounts which are affected. One is purchase account and the other one is XYZ and company. These are the two accounts which are affected. Okay, and the third is which account to be debited and which account to be credited. So the journal entry of this particular transaction is purchase account debtor to XYZ and company. So purchase account will be debited and XYZ and company will be credited. Okay, and the last and very important dimension of this particular transaction is purchase account, where this purchase account is found in the financial statements. Where can we find the purchase account? The purchase account can be found in the trading account. Okay, I have written very clearly here in the trading account, and it will be written on the debit side of trading account. Okay, and XYZ and company, where can be the XYZ and company account is found? It is found in the balance sheet. Okay, on the liability side you can see here I have written this particular dimensions, balance sheet / L. L means liabilities. So this is how the new method or new type of recording can be understood. Okay, guys. So the students generally practiced a simple method of recording the transaction, or generalizing the transactions, but this is a very beautiful method which I believe that the students will not forget for their whole life. And approach to journal entries for modern accounting. Okay, in modern accounting you will not find the transactions in the form of sentences. Okay, you and in modern accounting you'll find the transactions in the form of bills or documents, or vouchers or invoices. Okay, I have written it very clearly over here. I have written like bill or document or invoice, bills or documents or invoice or voucher. So these are the four different names. Uh, it will be in the form of bill or document or invoice or voucher. Okay, so in modern accounting also the practice is almost same. Like in modern accounting, the modern accounting is practiced on a computer application. Okay, so the creation of company is the foremost and important thing, and after creating the company you have to create the ledgers and you have to create the stock items. Okay, so after creating the ledgers and stock items you have to record the transactions. These are the three simple things which the which on a computer application can be practiced. Okay, and first thing is identifying the type of transaction, the same points like in manual accounting, and the second is identifying the accounts in the transaction, and the third is which account to be debited and which account to be credited, and the fourth is something you don't need to remember, that purchase account, where the purchase account can be found, or where the XYZ and company account can be found. Okay, it will automatically be, when you record the transaction, the recording and the posting part is done simultaneously in some softwares, and in some softwares we have to post the journals to the ledgers. Okay, guys. And a very important note for students: every bill we receive in the business will be a sales bill. Okay, every document or every bill we which the business receives will be a sales bill, with respect to let it be the operating expenditures, and let it be the capital expenditures, or let it be the revenue expenditures. Okay, these are the three types of expenses which occur in any business. So operating expenses refers to the expenses which we record in the profit and loss account. Okay, and the capital expenses refers to the expenses which we record in the balance sheet on the asset side, that is the fixed assets. Purchase of fixed assets is known as the capital expenditure, and the revenue expenditures refers to the expenses which we record in the trading account. Okay, guys, so you will understand this statement in coming sessions for sure. And that's all for this session, guys, and requesting you to like, share and subscribe our channel with near and dears. And our next session deals with the understanding the important gaps with reference to manual accounting and modern accounting. Have a wonderful day, guys.